Okay, so let's dive into AI in the European financial world. You know, this is a story where the absolutely massive hype is crashing headfirst into a pretty complex reality.
First up, let's just talk about the scale of the hype. Citigroup estimates that the global banking sector could pull in an extra $2 trillion in profit from AI by 2028. I mean, a number that big, that's what's fueling this absolute frenzy of investment. And it's not just analysts. The leaders inside the banks are all in. A huge 93% of them expect AI to boost their profits. They don't just think it's going to help a little bit. They believe it's going to fundamentally transform, well, everything. But here's the turn. After all these years, after billions have been poured in, has that revolution actually happened? Or is the reality on the ground maybe a little more complicated?
To really get the disconnect here, you first have to appreciate the sheer scale of the promise. I mean, this was and still is a true AI gold rush, and the numbers are just staggering.
So just look at this chart. It lays out the whole story behind that gold rush. The AI market in finance is set to just explode, right? From about £29 billion today to over $143 billion by 2030. You see a compound annual growth rate of over 30%, and that is what's driving this incredible wave of investment.
Okay, so that's the promise. But what about the performance? What are they actually getting for all that money? Well, the reality check tells a very, very different story.
Yeah, despite all that cash being spent, a recent Deloitte report dropped a bit of a bombshell. Only 38% of AI projects in finance are actually hitting their return on investment targets. That means a whopping 62% are underperforming. Think about that. Most projects just aren't delivering.
And this number, this one reveals a huge confidence gap. According to EY, only 9% of European financial firms feel like they're ahead of the curve on AI. So while the hype is massive on the outside, internally, most of them feel like they're falling behind.
Which, brings us to the big question. The technology is here. The money is definitely there. So, what's the holdup? Why is this AI revolution stalling out in the real world?
Well, the answer, believe it or not, has less to do with the algorithms and a lot more to do with people. The biggest bottleneck isn't the tech. It's a massive shortage of the right kind of people.
This quote from Freya Scammels at Caspian One it hits the nail on the head. The problem isn't just hiring a smart AI coder, it's finding an expert who actually gets the high-stakes, super-regulated world of finance.
And here's why that difference is so critical. A generalist AI expert, from a big tech company, they'll build a model that's super accurate. But a finance-specialized expert, they know that model has to be explainable for regulators. They get the logic of trading, they get risk, they get compliance, and the result of that? Well, Goldman Sachs found that projects with those specialized experts get implemented nearly 80% faster. That's the real difference maker. And if the talent gap wasn't enough, there's another huge hurdle. A brand new, complex regulatory landscape, all led by the European Union's landmark, AI Act. This changes the game. Okay, so the EU AI Act looks complicated, but it's actually pretty straightforward. It's a risk-based system with 4 tiers. At the very top, anything deemed unacceptable risk is just banned, gone. Then you have high-risk systems like credit scoring, which have to follow really strict new rules. Limited risk, like chatbots, just have to be transparent that you're talking to an AI. And for minimal risk stuff, like your spam filter, no new rules at all.
And to make it really clear, here is some of the things that are now totally banned. We're talking about governments using social scoring, AI that harmfully manipulates people, or scraping facial images from the web. So this new rulebook, it raises the stakes for everyone. So you've got the talent gap, you've got tough new regulations. With all these challenges, where is AI actually working in finance today? Well, the answer isn't in some flashy trading algorithm. It's in the engine room of the bank, the back office.
And there's a really fascinating split here. On the one hand, funds that are actively managed by an AI, they aren't really beating their human counterparts. But on the other hand, investing in AI companies is absolutely booming. In fact, portfolio allocation to AI stocks has jumped from 9% to 14% since just 2023.
And this gets to the heart of where AI is quietly winning. According to EY, almost half of all AI use cases right now are focused on back-office functions. So the real revolution isn't an AI making a billion-dollar trade, it's about making the whole system just run better.
These are the practical, real-world wins. AI is delivering measurable value by automating things like know your customer checks, getting better at spotting fraud, and streamlining all that painful risk in regulatory reporting. Look, it's not glamorous work, but it is absolutely essential.
So there you have it. That's the real state of AI in finance today. It's this story of incredible hype, meeting the tough realities of talent gaps and new rules. And it's succeeding, not by replacing traders, but by helping out in the back office. Which leaves us with the big question for the future. When it really counts, who gets the final say, the human or the algorithm?